I'm Jordan Moore,
I'm Tyrone Whitmore.
and this is our Bloomberg project for Finance 653 MBA Financial Analysis. So today we're going to be evaluating three industries, five companies each, on their liquidity, asset management, profitability, financial leverage, and economic value added.
Our agenda is to give an analysis of each of the companies and give you the option of to invest and to not invest into the companies. For our first industry, we have the software industry, which includes Cisco, IBM, Adobe, Procore Technologies, and Workday.
So for first, we're going to give you an overview of the companies. So Procore Technologies is an American construction management software service company founded in 2002. IBM is International Business Machines Corporation. They're an American multinational technology company present in over 175 countries. We have Cisco. They are an American multinational digital communications technology conglomerate corporation. They develop, manufacture, and sell networking, hardware, software, telecommunications, equipment, and other high technology services and products. And then we have Adobe. They are formerly known as Adobe Systems Incorporated. And they're an American multinational computer software company. And Workday is an American on-demand financial management, human capital management, and student information system software vendor. So first we have the liquidity for the years 2023 through 2019. And we can see that Procore has the highest of all the ratios when looking at the current ratio, quick ratio, and cash ratio. And we also see that they don't have any negatives like some other ones, or none of them have any negatives. And then they're also relatively consistent, which is what we like to see.
For the next section, we're looking at our financial leverage in the companies. Financial leverage essentially tells how the company is leveraged out. Are we more of a debt company? Are we more equity? In this case, we have Procore and Adobe having the better numbers out of everybody because they have the least amount of debt and a better debt to equity ratio compared to other companies. Like IBM, they have 265, so $260 for every $265 for every $1 that's in debt. And they also have good equity multipliers. Procore being the 1.636 and then Adobe being 1.8. Next is our asset management, which is where we're trying to figure out how our assets are turning over and also if we're able to move the products that we have. In this case, Adobe and Cisco have the higher numbers and the more consistent numbers at 0.6817 and 0.5812 throughout the years 2019 through 2023. You can see that they have grown consistently and are the most consistent out of the group.
For our next factor, we'll look at profitability. So for profitability, we're going to look at the profit margin, ROE, and ROA of all of the companies. So we see that IBM and Procore Technologies are pretty inconsistent, and they stay negative, which means that they don't manage their assets very well, and we don't like this in the company. Next, we're going to look at our economic value added. So we'll look at our NOPAT and our WACC. And for both of them, we see Cisco and IBM are also doing the best in this area. And then IBM does drop a little bit in 2021 regarding their WACC. And they're also they're more consistent than the other companies. So for our recommendations for the software industry, we recommend to invest in IBM the most. And then that's because of its high asset turnover, its has the lowest interest burden and the largest WAC, and then they also have good dividend payments. And then we do not suggest investing in Procore Technologies because they have a negative profit margin and a negative ROE and an ROA. So for our next industry, we're going to do the social media industry. So that's going to be Meta platforms, Pinterest, Spotify, Snapchat, and Alphabet.
Spotify is a Swedish audio streaming company that was founded in 2006. It's one of the larger music streaming services with over 615 million monthly users, including 239 million paying the subscriptions. Alphabet is an American multinational conglomerate holding company. Alphabet is the third largest tech company by revenue and one of its most valuable companies. It offers a wide range of products and platforms including Google Search, Google Maps, calendars, Gmail, etc. Snapchat is a multimedia instant messaging app service made by Snap Incorporated, with its principal features being pictures and messages that are only available for a short amount of time and then becoming inaccessible to its recipients. And Meta is doing the same, as it's formerly known as Facebook Incorporated. Is a multinational technology conglomerate. It has companies involved in Facebook, Instagram, Threads, WhatsApp, and other products. And Pinterest finally is an American image sharing and social media platform that enables saving, discovery, ideas, and recipes, homes, and styles.
So for our liquidity, once again, we're going to do the current ratio, quick ratio, and cash ratios. So for this category, we see that Spotify, Alphabet, and Meta are three of the better companies in this area. We see that their ratios are not too high, such as like Pinterest. Pinterest gets pretty high. It means that they're holding on to too much inventory and receivables. Next, we'll look at our financial leverage of this industry. So once again, we'll look at our total debt ratio, our debt to equity ratio, and our equity multiplier ratio. So for this, we specifically don't like Snapchat because they hold on to a lot of debt when looking at their debt to equity ratio. It's the highest of the 5 companies. And then the ones that we do like the most, we like Meta and we also like Alphabet, simply because their equity multiplier ratios are getting higher and growing over time, and we like that to see growth in a company.
For our asset management, the companies that we like the most would be Spotify and Pinterest. And then the third company would be Alphabet. This is because they have multiple people coming in now. They're able to turn the product multiple times. Profitability. We like Alphabet, and we like the profits of Meta because over the years you can see that they have the highest, with Snapchat and Spotify being in the negatives throughout the time period of 2023 and 2019. And they both have high ROE and ROAs. When it comes to the economic value added, we like the Notepad and WAC of the Alphabet and Meta company, with Alphabet being more because of the amount that they're adding compared to the other companies available. They're adding about 20,000 in their Notepad and about 380,000 for the WAC. And again, with Snapchat and Spotify being negative. So in this case, the company that we would most likely recommend to invest would be Alphabet because of having the lowest cost of WAC, its consistency, having the second largest asset turnover, stable and increasing value and economics, and the highest earnings per share. The company we would not suggest investing in would be Snapchat because of its high interest burden, negative WAC, and negative profit margins.
So for our next final industry, we have the restaurant industry, and the companies that we chose are Texas Roadhouse, Chipotle, Wingstop, Cheesecake Factory, and Starbucks. So for Chipotle, they are also known as just Chipotle. They're an international chain of fast casual restaurants specializing in bowls, tacos, burritos, and as of March 2023, they have 3,200 restaurants. Starbucks, they're a corporation and an American multinational chain of coffee houses and roastery reserves. It was founded in 1971 and is currently the world's largest coffee house chain. As of November of 2022, they have 35,711 stores in 80 countries. And in Texas Roadhouse, they are an American steakhouse chain that specializes in steaks in a Texan southwestern cuisine style. It is a subsidiary of Texas Roadhouse Incorporated, which has two other concepts, Bubba's 33 and Jaggers. As of August 2021, the chain operates about 627 locations in 49 U.S. states and 29 international locations in 10 countries. Wingstop is an American international chain of restaurants that primarily sells chicken wings. The restaurant chain was founded in 1994 and began offering franchises in 1997. As of 2002, they have over 1,400 restaurants. In 2003, the chain was acquired by Gemini Investors, which sold it to Rourke Capital Group in 2010, and they went public in 2015. Cheesecake Factory, they are an American restaurant company and distributor of cheesecake based in the U.S. It operates 219 full-service restaurants under the Cheesecake Factory brand, and they also operate 2 bakery production facilities and licenses 2 bakery-based menus for other food service operators.
When it comes to liquidity of all the companies that we end up liking the most would be Chipotle and Starbucks. This mainly comes from a good quick ratio, a good cash ratio. I feel like they're managing their money well, and also you can see a consistency between them. And then for our financial leverage, the ones that we enjoy the most will still be Chipotle and Starbucks because of them having the lowest debt ratios. As you can see, places like Cheesecake Factory and Texas Roadhouse, they have pretty high debt to equity ratios, and then they have low equity multipliers.
So as for our asset management, we look at our total asset turnover for these restaurants, and for that, it just determines how they manage their assets. And for this category, we seem to like Chipotle a little bit more than, say, Cheesecake Factory and Starbucks. So for our profitability, we can see that Cheesecake Factory, they kind of started out pretty low, and they eventually got a little higher, even though they stayed relatively negative. We also see that Starbucks ROE has been consistently negative over the years. And then in 2023, it looks like the ROA for Wingstop and Chipotle has been doing the best as of recent. And then we're going to look at our economic value added. Once again, our NOPAT and our FLAC. We'll see that Cheesecake Factory has been struggling kind of the most with their WAC. It was very inconsistent over time, fluctuates, and that's not something that we want. We want consistency within our numbers. And then we also see that Chipotle has the highest NOPAT, has been doing really well. And then Wingstop has a high WAC as well. And so, for our recommendation for the restaurant industry, we recommend you invest in Chipotle. It's been doing the best over a longer period of time. It has high profit margins and a high ROA. It also has no interest burden and has the most equity. And for the company that we suggest you do not invest in is Cheesecake Factory. They have numbers that show that they have mismanaged their money, negative economic value, and have a volatile earnings per share. And that's not something that we want to see in a company. We want them to be pretty consistent, either consistent or increasing. And so for our summary, we have our good investments. We have IBM, Alphabet, and Chipotle. And then we have some investments that are okay, we just wouldn't recommend them. That might be Cisco, Starbucks, Wingstop. They just have a couple of issues that seem to concern us. And then some bad investments that we would recommend you not make at all are Snapchat, Cheesecake Factory, and Procore Technologies. Their numbers were very concerning to us, a lot of them in the negatives, inconsistency, things like that we don't want to see in a company. And we got all of this information from the Bloomberg terminal. Thank you.